property developer, insurance company, sovereign wealth funds. Real estate investors come in different shapes and sizes. Today, I'm going to talk about some of the most prominent types of real estate investors. Hey everyone, this is Jenny from Real Estate English Academy, the place for real estate professionals to boost their English. Today, in part 2 of our 3-part series, I'm going to talk about different types of real estate investors. We'll look at what those investors do, and I'll give you some specific terminology that you can use to boost your English when talking about real estate investment. But before we dive in, please subscribe to our channel and hit the bell button to turn on notifications if you want to see more videos like this one. And if you want to test your knowledge of investor types, click on the link in the video description and take our quiz. Let's start off today's lesson by talking about a real estate investor that you might not think of right away. Property developers. Property developers, or property development companies, invest in vacant lots, land sites, or properties in need of renovation or rebuilding. With their investment, property developers attempt to put land to its most profitable use by means of construction or improvement activities. Some key elements involved here are having or obtaining a building permit from the city or local government, which gives the property developer permission to build and develop the site, and making sure the site is zoned for the kind of development that they are planning. Zoning refers to the usage type designated by the city for that site within the scope of urban planning measures. For example, a site can be zoned for retail, commercial, industrial, special purpose, or residential use. In some cases, a property developer might decide to demolish any stock buildings on the site and construct a new building, which is also sometimes referred to as a new build. The term stock building here refers to buildings that are already in place on the site as purchased by the property developer. In other cases, a property developer might be interested in renovating a stock building located on the site or converting the stock building for a different use. One example of a conversion would be turning an office building into a residential building. Property developers work with many different counterparts along each step of this process, including architects, city planners, engineers, surveyors, inspectors, contractors, lawyers, and leasing agents. Another type of investor frequently interested in real estate investments are insurance companies. In order to be insured, people and businesses have to pay premiums, which is a specific amount of money paid for coverage under an insurance policy. Insurance companies collect these premiums, and in doing so, accumulate a large sum of money. Some of this money is held in reserve to satisfy claims and pay for operating expenses. To keep money in reserve is another way of saying to keep money in a safe place where it can easily be accessed when needed, like a bank account. The term claim refers to a demand or request made by insured parties asking the insurance company to cover expenses or reimburse them for damage. Insurance companies, though, tend to invest the majority of the premiums they collect in profit-earning enterprises such as real estate. Investing in assets like real estate is one way that insurance companies stay profitable. The last type of investor that we're going to talk about today are sovereign wealth funds. Sovereign wealth funds are state-owned investment funds that invest in different asset classes, including real estate. Most sovereign wealth funds are funded by foreign exchange reserves held by the central bank to benefit that country's economy and citizens. The Norwegian State Fund is the most prominent example of a sovereign wealth fund. Already familiar with one or more of these investor types? If so, tell me about your experience in the comments below. Thanks for watching, and don't forget to apply the terms you learned today to your own real estate English. See you next time.